Hello and welcome to another update video about Bitcoin. On the Bitcoin chart, we are currently tracking a smaller time frame structure here. It's just a 15-minute chart at the moment. There isn't really much happening, right? I mean, so that's why we're digging into the micro patterns. Let's talk about short-term bullish and short-term bearish scenarios for Bitcoin. And yeah, the trend is still up. Trend is up locally from the swing low that formed on Monday, but obviously it's a very lousy looking diagonal pattern that's unfolding here. Still, I try to explain to you the microstructure best I can, to the best of my abilities and what Elliott Wave allows us to do. I mean, it's not a crystal ball, and at some point we get to the limits of what an analysis method can do, but also the latest or the last two support areas did hold. Actually, three of them, the larger one and then here the smaller one, and now the one that I shared intraday on Discord also held. And the thesis was that this could be a wave 1 and a wave 2 pullback. So we have a nano 1-2 setup here. And it's entirely possible that now this third wave has started, which could take us to the yellow trend line there maybe. And then we can get another wave 4 and a wave 5. As you might know, this fifth wave should complete wave C of circle wave 3. And this is the main third wave there. And I shared with you in the last videos for this third wave, circle 3, the first ideal target is the $105,390 level. And honestly, that hasn't changed. So that's still the next milestone target. Just shifting here the labels a little bit to the right, but overall, this is the roadmap. Now, can I promise you that the third wave, the internal third wave, has started? No, because we are only witnessing a few green candles. I mean, if a few green candles would confirm a breakout, it would be quite easy, but that's not what it does. No, we only see a three-wave reaction to support, so easily the market could test it again. But if the market is short-term bullish, it might move because the pullback reached the 50% retracement. This, let's say, micro or nano support area is located between 100,837 and 101,622. And as long as this box is holding, the focus could be on higher more directly. And we could assume that the internal B wave here formed the low yesterday, right? That was when the price bottomed at around 100,250. However, I have to say the lower support region remains relevant. Yeah, I leave it on the chart because what happens if this very fragile, I have to say, very weak and fragile upper micro support breaks? Well, then this area will become relevant for maybe a reset of this wave B. But hey, that's currently not you know, we're holding above support, so that would come into focus should the market break below the intraday low and then break below that nano support area, okay? But until then, you know, we can watch for higher, at least cautiously. We have, you know, we still have to be on the side of caution because the market has not rallied in any impulsive way to the upside. This internal third wave, as I said, could take us to the yellow trend line, and then there should be another, let's say, weak pullback, sideways correction in this internal 4, and then maybe one more high in wave 5. And yeah, overall then, when that's done, another wave 4 pullback would be ideal. Bear in mind, this could be a diagonal, so the wave 4 is deep, and the wave 5 should reach at least the 161.8 extension at 106,550, but it depends on where circle wave 3 lands. So if the wave 5 extends or the wave 3 extends, then the wave 5 will likely also move up higher and extend further, right? Because sort of the longer the third wave, the longer the fifth wave. That's typically how it works. Now, what would be the short-term bearish count? So from a short-term bearish point of view, obviously, it starts to look less and less likely that this is a wave 4. Therefore, I think it kind of makes sense if we really talk about short-term bearish, but it's not anything I would prefer at this stage. So blue seems to be leading, right? Because this yellow or the let's say short-term bearish count would get very, very protracted here. Let me shift everything to the right. This just looks too large for an internal fourth wave, right? So what we had before is to say, okay, from a bearish point of view, maybe this is just a wave 4 bounce. The third wave was down here. But it kind of makes more sense if this is still bearish, I would first of all need a break below support levels, at least 99,743. But then the idea would be this is an A wave down, this is some kind of a B wave, and then a C wave down could happen to complete the third wave. I mean, this would be, from a short-term bearish point of view, probably the most reasonable assumption that we're dealing with a diagonal, but this B wave is massive again. So it typically in the past has shown us that when that happens, it might be less likely that this is a B wave, an internal B wave. Could also be WXY and then A, B, C. I mean, there are other options. Yeah, I might go, choose one of these, but overall, the main takeaway is anyway that as long as we're holding above support, the local trend at least from Monday this week is up. And we haven't seen any impulsive decline from then. And the move to the upside seems to be very, very slow, however. So I still try to make sense of these microstructures. But yeah, I can tell you this is a very fragile pattern. And when there just needs to be some volatility around Fed interest rate decision, and it might invalidate one way or another. But we have to remain flexible in a diagonal. So for now, supports are holding. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.